Remember, the market's moving up. We have a small real body and a long real body. Now, remember, with the Forex market, the second real body normally is going to be the opposite color of the first real body. In non-Forex, it doesn't matter if the color is the same. But because the opening here is almost always going to be nearly the same as the prior close, the only way this could be a harami, in other words, it's a spinning top, is this is a black real body. In the like vein, a bull harami, because the opening here is going to be the same as the close, the only way this could be a small real body inside the prior black real body is if this is a white real body. So this white real body is in prior black real body. This is a bullish harami. Remember, the harami is not a major reversal signal, but it is a sign, as the Japanese would say, that the prior trend is losing its breath. So the prior trend before this bull harami at 3 was down, so that's giving us a clue that the preceding downtrend was losing some downside momentum. Now, let's go to part 4. Okay, what pattern is 4? And once again, let's just put the player control and pause. Okay, so what pattern is 4? If you said bullish engulfing pattern, wrong. And the reason for that, the trend is wrong. Remember, a bullish engulfing pattern must come after a downtrend. Remember, one of the concepts is that we not only have to have the shape of the candlestick line or the pattern. Remember, a pattern is made of more than one candlestick line, but we also need the trend. So a bullish engulfing pattern must come after a downtrend, even a short-term downtrend. This particular candlestick signal came after a rally. So this is not a bullish engulfing pattern. And let's look at part 5. What pattern is 5? Put the player control and pause to think about it. Okay, pattern 5. If you said bearish engulfing pattern, you're right. It's a bearish engulfing pattern because the short-term trend, even if you looked at even this little rally here, but certainly from here, the short-term trend is up. A bearish engulfing pattern comes after a rally, and this was certainly a rally. It's a black real body wrapping around a white real body, coming after an uptrend, so that meets both those criteria. So very interesting how we got a group of signals right around the same level here. Okay, the spinning top, the doji or shooting star, the bearish engulfing pattern. By the way, this group of signals here, this is not quite a harami, although this is a real body in a long real body. The second real body has to be much smaller than the first real body. And if you want kind of a general rule, it should be about 25% or less of the long real body. So you can see how this was certainly 25% or less of this real body, as this harami also here was 25% or less of that real body. So this was certainly not 25% of this tall white real body. So moving on, okay, what candlestick indicators were there at 1 to 4? So hit the pause control now. Okay, so let's go through these one at a time. 2 shooting stars, okay, coming after a little uptrend here. It's a little uptrend, 2 shooting stars. And one of the things we could do with the candlestick signals is make them resistant. So we could take the higher shooting star, and that becomes a resistance area. And even if you use this high here as potential resistance, see how the market got to the resistance. Let's use this one. Even though it got above it, it didn't close above it. Remember, to break a resistance area, the market has to close above resistance. 2, this I would view as a harami, bearish harami, because that second real body was certainly 25% or less of the first real body. 3, over here, just to make it a little easier to see in the green semicircle, what is that? That's right, a bearish engulfing pattern. Comes after an uptrend. So 3 is a bearish engulfing pattern. And 4, didn't the market poke its head above resistance? Now remember, in one of the prior slides, I mentioned one of my favorite Western indicators. Remember, market breaks above a really clear-cut resistance area, and we certainly had that resistance as shown by these dual red lines. So 4 essentially was a falling off the roof. In other words, a failure to hold the new highs. And just to refresh your memory, we get a target with a falling off the roof. As soon as the market gets back under the broken resistance area, we set our stop here, our protective sell stop if we're short, And our target is a return to the most recent low, in other words, where the rally began. So our target would be down there. So that would have been a very attractive risk reward. Okay, now let's move on to case study 4. Okay, what are the signals here hinting us of some trouble? And once again, just hit the pause control. Okay, so first we have the doji. Now, because this doji is also within the prior candle, it's also harami. We've seen quite a few of those in the prior slides. Next is a bearish engulfing pattern at 2 with the black candle wrapping around the white candle. At 3, another bearish engulfing pattern. And 4, the same resistance area. So we have a grouping of indicators all converging at the same level. Now, we're going to be looking at this slide again, or this chart again. And so these are, by the way, these are the signals, the doji, the harami, the bearish engulfing pattern at 2 and 3, and the resistance. Now, the question is, for part 2 of this case study, would you sell at 3? And put the player control on pause and think about that. Remember, we don't know what happened, after the, action here. We don't know the market sold off, so forget about all of this stuff. If we were at this juncture here, would you be selling? So think about it. Okay, so let's move on. Would you sell at 3? Okay, first of all, notice, and again, let me just take this out here. We're going to forget about all this stuff. So we're only at time frame 3. So first of all, although we have a grouping of signals, the doji, the bearish engulfing pattern, the resistance area, keep this in mind. If we're selling a 3, notice these 2 black horizontal lines. Isn't the market at support? Okay, remember, we don't know the market broke under support the next session. So if you're selling at 3, you're really selling at a support level. So, one of the things you should be looking at is, no, I wouldn't be selling it because it's at a support level. Maybe the next session with the market closing under the support area, we could think about selling it because the market broke a support area. Do we sell here? By doing so, in other words, do we sell here? We have to see if the market is near a support area. And obviously, we'd have to go back a little bit further on the chart to see if the market indeed is at a support area here. If not, then it's perfectly fine to be selling it here because, 1, the market broke under the support area. 2, it also broke out of an expanding top. I really like it when the market builds a top or expands on a top or expands on a base, from a bottom, because it really showing that the market is going from up to neutral and